Hi everyone, it's Katya and welcome to my channel. Today we are talking about construction loans, so let's get started. So what is a construction loan? Costs for construction loans are usually used to build an actual home and as well as that to cover the labor. The costs are not used to furnish the home or anything like that. Typically, once the house is built, the construction loan is either refinanced into a conventional or FHA or a standard mortgage or to be paid off. So if you are looking to build a brand new home from a ground up, construction loan will be your best option because usually construction loans are short-term loans and the funds are usually available for you for a year or so. So the loans is a short term. And after that, the loan has to be converted into a standard loan or to be paid off. Now let's talk about how the construction loans work. So before you can be approved for a construction loan, you would need a plan for your future home. And the process of pre-approval, it's not just a standard process of pre-approval, just like for a conventional or FHA, for example, but you will not only have to prove your creditworthiness and ability to repay, but also get a detailed plan of the whole project and get it approved by the lender. Of course, that plan has to include an estimate of how much it would cost to build their particular home. The lender might also have to approve a builder that you will be using to build this home. So you would not be approved for a loan until after you have all of these details and all of the paperwork sent to your lender. However, you can absolutely start talking to the lenders and see what options you have. So how it works with the construction loans, the funds are not going to be given to you as a lump sum, nor the builder as a lump sum. The funds will be given to the builder in small amounts at the time. So before you actually start building, your builder will break down the building of your home into stages. And depending on how much of funds the builder will need for this particular stage, this is how much the bank will disperse to them. And once every single stage is complete, the inspector will come out and make sure that these funds were actually used for this builder and for this particular stage. So it's important to understand the lender's disbursement schedule because you want to be in a loop on which stage goes when and how the process is going as well. Typically, during a building process, you are making interest-only payments for however long it takes to build a home. And at the end of the loan, if there are any funds left, you cannot use them to furnish the home or anything like that because the construction loans is mainly for building the home, not furnishing the home. Now let's talk about types of construction loans. When it gets to construction loans, there are a few different types of construction loans. The first one is called construction to permanent loan, which means that a construction loan converts into a permanent loan once the building is complete. This is one of the best types of the construction loans because you only have one closing and everything is done within one closing. So once the building is complete and passed all of the inspections, your loan will be automatically converted into a standard long-term loan. And you would not need to have a different closing, meaning that you are saving the funds and you're paying only for one closing. And additionally, what's good about this loan is you would not have to worry about obtaining a financing for your home because you have already got everything done when you were applying for a construction loan. Once you have approval for your construction loan, your loan would automatically convert into a permanent loan after the construction is done. The second type is construction-only loan, and construction-only loan is the loan just like it sounds for construction purposes only. So you are receiving the funds for construction purposes, and once the construction is done, you either have to A, pay this loan off, or B, get a separate financing for a permanent loan. With these types of loans, you will get two different closing processes. First closing will be for a construction loan. So of course you will have to go through a pre-approval process. And the second will be the same, but you will have to go through a pre-approval process for an actual building. So you have two different closings that you have to pay for, which kind of additional funds out of your pocket. And keep in mind, closing costs are anywhere from 3 to 5% of the loan amount. So having a construction-only loan will have you spending more funds that could have been saved if you were to go with a construction to permanent loan. Why would you want to choose a construction-only loan? Well, the main benefit of having construction-only loan is that you have time to shop around for the best mortgage for you. So if, let's say, during the year the interest goes down and your options become more favorable to you, that can be a benefit to you. But if the interest goes up, well, you're stuck with what you're able to get. Why construction to permanent loan is different from construction only loan is because with construction to permanent loan, you are limited to one option only because you're going through one lender and you are choosing this particular option, versus if you're going with construction only loans, while the construction is going, you are able to shop around and find the best option for you. Another option is owner-builder construction loans. These loans are made for someone who wants to be their own general contractor, and of course it saves you funds because you are not spending funds on somebody else who is able to do that job for you, but you do everything on your own. That is typically for a person who does have a general contractor license and who is bonded and insured. There is also another option called Renovation or 203k loans. I have a whole another video about 203k loans, and I will just leave a link for you guys right here. Now, let's talk about what do construction loans cover. So as I mentioned before, construction loans are a little different than any other loans because the funds are not given to you. The funds will be disbursed in stage, and they are given to the builder or to the general contractor as needed as the stage is completed. These funds can be used for the costs related to the project, like getting the permits, getting the materials. It also covers the labor and any other expenses that has to do with the building process. Now let's talk about construction loans rates and the requirements for them. So let's talk about the rates first. The rates are usually going depending on what kind of a construction loan you're getting. For example, a construction to permanent loan, the rates are usually in the same line with a standard loans, because at the end of the construction loan, your a loan is converted to a permanent loan. When it gets to construction only loans, the rates will be on a higher end. The requirements for a construction loans are pretty much the same, but there are a few additional documents that you will have to provide your lender with. The traditional documentation is, of course, your W-2s or 1099s for past 2 years, your bank statements, your ID, your tax returns. That is all provided to your lender to examine your ability to repay this loan and to see your credit worthiness. Now, keep in mind, for construction loans, there are usually 20% down payment required. As well as that, for a construction loans, your debt to income ratio cannot be more than 45%, and your credit score has to be at least 620. In addition to that, the lender might require additional funds as reserves to be approved for a construction loan. And of course, just like I mentioned before, you will need to have all of the documentation from your builder that you will have to provide your lender with. So to sum up, a construction loan can be a great option for someone who is looking to build their dream home from a ground up. The only downside of a construction loan is the process is longer than if you were to go and buy a home available on the market today, because the building process and approval process would take anywhere from a few months up to a year. Thank you so much for taking time to watch this video. If this information was useful for you, please click thumbs up and a subscribe button so the next time my video comes up, you will be notified. If you folks have any questions, please feel free to reach out to me and I will be more than happy to assist you. Thanks again for your time and you folks have a great one.